Many people's view Nigeria will overtake South Africa in the next 10 years or so as Africa's biggest economy. The World Bank's Nigeria Investment Climate Report has emphasised on the country's improved investment climate. The bank says more needs to be done, though, to meet global standards. To discuss this and more, we spoke to Marie Francoise, the country director at World Bank Nigeria. Here she is.
Nigeria has rather low labor costs compared to countries in the same range, such as, Brazil and even South Africa. The challenge is to see how to address these constraints, the productivity, so that actually Nigeria can fully benefit from the advantages. My understanding is that the government is already addressing some of them. If you saw the report, the major one is electricity. 80% of firms are saying that it is a major constraint. They have to buy a generator, which means that before they actually start investing in their own industry, they have to buy things that other enterprise of firms don't have to do in other countries. So indeed, these are issues, but the good news is that government is trying to make progress, although it is a long-term agenda. What I very much like on this particular constraint is that government is trying to provide power to industries, so to make sure that the industrial zones are fully equipped. And with the World Bank, we have helped develop energy, electricity in, for example, some part of Abuja. So indeed, I think that this issue is really the key one. There are other ones, such as access to credit and also issues related to tax administration. So the issues are there, but I think that what I'm taking for this morning sessions is that at least government has taken this agenda seriously, and there is a package of structured actions, more importantly with result indicators.
The Nigerian government has identified certain key sectors as open for investment, but what sectors do investors find lucrative, considering the government's assertion that Nigeria is the preferred investment destination?
Well, first of all, if you look at past investment, you can clearly see that the telecom, the ICT industry is represent a huge market. Today, I think that you have almost 100 million mobile subscribers, so that it is important. So the first step has been in the infrastructure access. Now, how do you move to the next level? I'm thinking, for example, of mobile banking. Mobile banking is now something extremely developed in a country like Kenya. If government was able to facilitate that, not only would it help address the access to finance, mobilize these resources, but also it creates the infrastructure, create opportunities for all kinds of trade, channeling resources. So I'm thinking of services. Secondly, in low manufacturing, again, building on the large market that Nigeria has, you could clearly see that now countries like China is actually becoming less competitive in consumer industry, electronics, for example, building refrigerators, TV sets, and so forth. So Nigeria could gradually enter into what we call this low manufacturing industry, but of course, again, it requires addressing the key issues that we have identified in the report.
The Eurozone crisis is likely to affect most sub-Saharan African countries. What steps is Nigeria taking to curb the situation?
I think that what we see is, first of all, to be able to keep to maintain the competitiveness and improve the competitiveness. Because what will happen is that actually the euro, Nigeria is trading a lot with euro. So the European will certainly try to improve their competitiveness, to protect their market. We need to see deepening of structural reform to make sure that Nigerian projects stay competitive as they move and they export. Secondly, I think that what is important is for Nigeria to be able to capture the domestic market. And what I like in government policy, one is, for example, you have probably followed, is on agriculture. Nigeria is importing a lot of agricultural products where actually the base is there to produce and the consumers are there.
The issue of of gender, in terms of investment and business climate, seriously has a serious impact. Now, how does the female gender fit into the Nigerian investment climate, considering the fact that only 15% of the Nigerian women are engaged in entrepreneurship in the country?
Yes, what we see that indeed there is a low base for women entrepreneurs. That means that they actually are doing something, but they are not in the formal sector. They produce, they sell, they trade, so they are in this informal sector. So the challenge is that, first of all, how do you equip them so that, first of all, they can access to the assets as their male counterparts? For example, in the gender review that we did, we saw that women have difficulty to access to land. And for example, just one reason is that the customary laws are such that it's difficult for women to inherit it for land. Although the Constitution of Nigeria stipulates that men and women are equal, but you see that you have these traditional laws that are not in favor of women. So I think that it will require dialogue for that. Also, I think that there is a need to have a concerted effort to improve their training. And thirdly, I think that what is more important is to help women organize themselves so that they can consolidate their capacity. You see a lot of production, even in the catering. I mean, they produce, they cook, but individually in small quantities. If they were able to organize themselves to a significant size, then they become a credible partner when they go to see the bankers.